Hey, all welcome here. I'm on travel, so I couldn't able to make it with my proper green screen and other things. But I just want to make this video, and it's an important video because this is the right time. You have to look into all these things because the market is currently volatile and it's an all-time high, right? So everybody will be like telling like a lot of things whether this is the right time to invest. The entire market is overvalued, so people are like selling it, right? So this is the right time to think about whether to stay invested or this the company which I am invested is really a good company or not, whether I need to sell my book my profit, or I need to exit out of my current position of this particular company. All those things will be going on your mind. So before that, this video will help you to understand whether the company you have picked is a right company or it's in the future or whatever it is in the long term, whether this company is going to give you a good return or not. So that view you will get, so that based on that you can wait for the particular company to hit the 52 weeks low or whatever the method which learned in the previous technical analysis, the Bollinger Band or ADX, whatever it is, right? So using that method, you can increase your position if it goes down, or if it is at high level, and you can, if you want to exit that the company is not a good company, you can always exit out of the company. So for that, I'm going to give you a guidance how to find those stock and how to decide it. Let's get into that. This is Sundar and you are watching Mindful Finance. Okay, so before that, whenever you are looking at a company, what are you looking at the company? In what basis you are trying to hold that company, or what basis you bought that company? If you have made the right choice, that is okay. If you are confused whether the company you picked is whether you don't know whether to hold that company, or I'm not sure whether this company is right or not. So based on that, this particular video you will understand how to decide it. But tell me one thing: if you bought a company, why you buy a company? Why you invest in certain company? In what basis you will be investing? Assuming that the company will grow, company will earn for you, right? If you are giving 100 rupees to a person, you'll expect that 100 rupees has to give some return to you, a consistent return or an expected return, right? Whether that return you are getting it or not, how will you find out? For example, take this particular company. This is Bharat Heavy Electricals. Look at this company. You see the road name. Are you able to see this operating profit, this particular section? When you see this operating profit section, what you are looking at it? But the main thing is the company has to bring profit for you, right? That is your goal. Is this company is bringing a proper profit for you? See, during the 2019, 2020, it is minus 133, doing 2021 minus 3,000, 828, 807, now it is 613. Is it a good company for you now? You tell me by seeing this one. This operating profit, which is giving you a proper expected return in a consistent way, right? I would say it's not giving. It's a randomized here and there. It's not giving you a consistent return. Sometimes it's in negative. See the minus 3,000. At least see it started at 9,000. Now you look at it is 600, and look at the OPM, which is operating profit margin. So this is what you have to look at. This operating profit margin is a very important parameter. Based on this parameter only, you will understand whether your money is properly used. Your money in the sense whether the company's expenses are minimized, because most of their money is going in operations. So if you see minus 5%, 4%, 6%, 7%, minus 1%, even if you ask the CEO of the company what is going to be the next future of this company, he won't be able to make it out. He's confused. There's no clarity. I cannot trust this company at all. Defense sector might be like booming like anything, but this is not a way I can decide to buy this company. This is random. I cannot invest on this company. Let me show you other company now. Let's say Jain Irrigation System. Okay, let's look at this. Okay, before that, this is a chart for BHL. Okay, if you see, the green color is the operating profit margin, the purple colors are sales. Look at the sales is like randomized. It's not even growing or it's not consistent, and the operating profit margins are reducing, right? So this you cannot decide. Now let's see this Jain Irrigation System. What you can see, look at their operating profit margin and the sales were growing, and then it is like somewhat, it's linear, like means it's stagnant. Right now it is stagnant, right? But look at this green line, right? Operating profit margin, it is growing. Even though your sales volume is less, their operating profit margin is growing. That means with the less amount of money expenses, they're able to bring the same sales whatever they had earlier. So that means this company is growing, right? Look at this one, operating profit, how it is 800, 900, 900, 900. It went through minus 51, but again it is growing, right? This was maybe due to the COVID time, right? It's growing. Look at the operating profit margin. It is consistent, 11%, 12%, 14%. And again, this was the COVID period, and it was picking up 10%. That it is again back to its normal. So that's how you have to decide. Let's see another example. Bharat wire ropes. Look at this. The sales volume is increasing, and parallelly, look at the profit margin. It is growing with the sales. That means it's a fantastic. It is growing like with very less operating profit, right? With the less operation cost. Sales is like increasing with their what do you say, the growth also, the operating profit also increasing. Let's see the chart table here. See 8, 9, 9, 9, 18. Now it's 164. Operating profit is consistently increasing. Will you choose this kind of company or this company? Where you don't know like where what is your profit is, like what profit you will get. Here is consistently my profit is growing. Look at the operating profit margin, it's increasing. So they have the power of pricing. So this company has a very good potential. What is the company? Bharat Wire Ropes, and this is Jain Irrigation. Now let's see Avenue Supermarts, D-Mart, how it is. Look at this, sales is increasing, but you look at so this is the dip. Every company will have a dip at this point of time, but still, see the operating profit margin staying consistently at the same level. The net profit is at the same level. What is the reason? Sales is increasing. The reason, at least they are managing their profit margin at the same level, even the sales volume also increasing. The reason is they are not able to set the price properly because they are consumer-based companies, retailers, right? If you increase dal price or something, suddenly people will not buy. People will reduce their consumption. So that is why volume is increasing. They are not able to have a power to set the price. So all these consumer durables, consumer good companies face this kind of problem. If the company has a potential to increase their price, so when the volume increases, if they increase the price, then they will have a very good revenue. Look at this, how it is. It's operating profit 215. Now it is 4,290. It is keep on increasing, right? So the profit is increasing. Their margin is consistent. So I can go and bet on this company. I don't need to worry because it clearly shows in 10 years when the company grows like this, my operating profit margin is 9%. I can assume the same thing and I can plan for my future. Let's check at the Tata Steel. So Tata Steel is a cyclic company, right? Sometimes if the infra grows, then the steel requirement will be more. Look at this one. See, volume is randomized. Volume is not consistent. The sales volume is not consistent. Their growth, look at that, is also like it's proportional to their volume, the sales volume, right? But see, it is, even though volume is more, but their rate, the operating profit very low. So that means they're not able to set their pricing properly, even though their sales is good. Let's look at their balance sheet. Look at the profit: 3,000, 16,000, 3,000, 13,000, 21,000, 29. It is increasing now, 32,000, because it's cyclic. So 1 year it will do, 1 year it may not do. At least you may have some kind of idea. Okay, was this 2 years it is performing, the next 2 year it will not perform. So I can accumulate the company at that point of. Look at that operating profit margin. It is increasing, and again it is decreasing, right? Because of cyclic nature and their infrastructure. So you need to understand the company, why their profit is reducing, what they are doing with the money, why they are not able to reduce their operating profit, right? So they need to reduce the operational cost. That is why big companies, they fire the people, they reduce the people count so that they can increase the operating profit, right? So let's see Infosys also, like volume is increasing, but look at it's consistent. Okay, same here also, same problem. volume is increasing, but they don't have the power to increase the price because India is for cheap. These are like a service company. They're giving people for foreign projects, right? If you increase the cost, nobody will come to India. So they have to maintain that one. So even the your sales volume is increasing, they are not able to cope up the similar way to increase their cost, their people cost. So their infra cost is increasing. The operation cost is increasing. Look at their there is keep on operating profit is increasing. It's consistently increasing, but their OPM is consistent, right? It's not increasing, it's consistent. So I'm okay, this is good for me, right? My operating profit margin is consistent, so that I can bet on this one. Okay, let me show you now. I have clearly told you that to find a company, the profit has to keep on increasing. So if you find any company which is not giving this kind of a consistent profit, please exit out of this product of that company if you are having a good profit in that company. Find a company which are giving this kind of consistent return if you are looking for a long-term thing. So let me show you an example to find out this kind of a stocks. So let's go to ticker tape. So from the screener you can screen for the stocks. So click on this add filter. So let's go and search for. Just use the word profit. You will get 5-year average net profit margin. Okay. Then go for EPS, like historical growth of earnings per share. Okay. Then I have a custom filter over here, which is PE ratio minus sector PE. So current PE minus sector PE. What does that mean is, if I minus the current PE with the sector PE, and if it is a negative, that means it is trading lesser than the sector PE. That means it's undervalued, right? So these are the ones. Let's go and set a value. So this has to be positive. Okay, at least I need a 10% here. 5-year historical growth, same. I at least need a 10. Okay, and in my custom filter, everything has to be minus. Okay, it should trade less than the thing. And the market cap, I want at least 10,000 crore. Okay, now you see I got 57 companies now. In this 57 companies, you go and check all the individual companies. See, Infosys we already checked. Let's check Sun Pharmaceutical Industries. So let's check Sun Pharmaceutical, how it is. Volume is increasing. See, the growth is net profit margin is somewhat, it's like flat, right? At least it's flat. Like past, initially it was volatile, but now it is consistent. Let's see the balance sheet. Operating profit, is it increasing? Yes, it's increasing. OPM, it is consistent. So that means it's a good company, right? And check as usual, but then you have to check the PE ratio, whether it is trading. It's little bit higher than the median PE, but it's trading at the lesser than the, let's see. So it is trading 5 points lesser than the sector PE. So that way it is good only. And HAL, let's see HAL. What is HAL doing? So PE wise, it's very high. It's trading very high. And let's see sales and margin. Sales are not consistent. Okay, it is random. That means it is cyclic. Somewhat, see, but you can see a pattern, right? It clearly shows cyclic nature. So but look at the net profit margin or operating profit margin. It is consistent, right? Let's see the balance sheet. If you see the profit, it is increasing. Clearly shows it is increasing. Their operating profit margin consistent. It's very clear, right? So that's how you have to find the best. You have to find the stocks, and you can go through, see from how many stocks we have rounded to 57. If you still want to reduce, so you can increase your market cap a little bit higher, and you'll get to 14 stocks. That means it's a very good stock. These are very good stocks. See Zydus, Dr. Reddy's, Shriram Finance, Power Finance, all are good companies. So find this kind of companies and go for a long term. And if you have this kind of stocks in your portfolio, make sure if it goes down to add more in this kind of companies. Now, hope you got the clear picture. Now you have the clarity about what to do at this point of time. When the market is at all-time high and it is volatile, what to do. So don't get panic. Be mindful and pick your stocks in that way and go for a longer run. Thank you. If you like this, if you like this video, please like it, share it with your friends and colleagues, and don't forget to press the notification icon. Thank you.